Welcome, and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. As many of you have followed our program over the years, we certainly try to find unconventional ways for many of you who have decided you weren't able to invest into your retirement, or at least have a nest egg for safety. So we try to share ways that you can kind of approach this, whether it's starting a business or finding better ways to invest your money other than perhaps maybe a 401k in the company that you work for, or an IRA. Well, joining us on the program today is someone who brings what can seem like unconventional methods, but I'm sure that by the time you're finished listening, you'll realize, well, I could do that. All I need to do is roll up my sleeves, get some work done, and learn how all this works. Our guest today's unconventional methods have earned him an average of more than 37% per year from stocks for more than 10 years. He's also going to share ways that you can double your nest egg every 1.9 years as well. In fact, his record is considered to be right up there with that of the greats such as Warren Buffett and Carl Icahn and every other famous investor perhaps you can think of. I'd like to welcome to the Beyond 50 radio program today someone who has spent more than 2 decades honing his own Dividend machine, earning millions for himself and his followers. And he's also an entrepreneur who set out to develop a secure investment strategy as well. I'd like to welcome to the Beyond 50 radio program today our guest and author of the book, The Great American Dividend Machine, Bill Spatrino. Bill, thank you for being on the program today.
Thank you, Patrick. It's a pleasure to talk to all your listeners.
You bet. Now, it's neat to see, as I had Warren Buffett's name up there some years ago when I was meandering around in a public library, I noticed a book on the shelf called The Snowball.
Oh, yeah.
And are you familiar with that book?
Oh, of course. Everybody. Warren Buffett was one of my mentors. And
yeah.
So he just explained that basically what he's done is put his money in the market for the last 60 or 70 years, and it keeps growing over a period of time. And the power of compound interest is extremely important. Unfortunately, most people don't learn about it until they're in their 50s and 60s, and they don't get a chance to benefit from it. But it's something to explain to your children and grandchildren, and that's what's really important.
Because time actually is money in that case.
Oh, absolutely. There's no question about it.
Now, I know you also have a lot of extensive experience that you taught, I believe it was it not economics, but I'm trying to remember.
I taught business, math, and accounting at community college here in Cleveland, in the inner city. Mm-hmm. And I've helped a lot of people. My crusade was always to explain to people the importance of investing for their future and planning for their future. And it's a very difficult subject because people have known me all my life and they don't want to invest. For instance, I was put into my school's Hall of Fame just recently, and I went there, and after I gave my speech, which is on YouTube, if you go to Bill Spatrino Truth Machine, you'll see the Hall of Fame speech. And afterwards, all my people that I know that around the country are like, oh, your friends are so lucky they invested with you. I said, they still don't invest with me. After I gave a speech, one person that was there and one person that saw my speech online out of 1,400 asked me how to get rich. The rest of the people didn't even ask me a question.
And there's the key thing that a lot of people, when they think about the stock market, they think of investing, the idea is to get rich and do something flashy and fancy. And as you talk about in your book, and if anybody had read, for instance, The Snowball, or, talked with people who really invest money, who are really in the game, they say, if you're going to do this right, it's not as sexy as they try to showcase it, in the news or in Hollywood movies, things like that. So let's talk about your journey and how that all started for you.
Well, what happened to me is I ended up going broke twice investing because a friend of mine got a franchise. We got involved in a company. I bought the stock, and the stock practically went broke. Okay, it went as much as broke. It went to pennies. Then another friend of mine got involved in a franchise, and I invested with that one, and I went broke again. Okay, but I was at a young age, and I lost amounts of money that, you lose $2,000 and then you lose $5,000, or $10,000. You get discouraged. But then I realized that the mistake I was making is I was trying to invest to get rich, and that's a mistake. What you do is you try to invest to get a return on your investment. Okay, back in the time when I started investing in the 80s, you could get 10% in a CD in a bank. Now you can't do that because all the countries around the world have gone into debt. So I started investing with $8,000, put the money in, and I got my first dividend check. I'll never forget it. It was $43, and my dad said, "What are you going to do? Do a Happy Meal with that?" And
this day and age, you would have been right.
You know, my dividends now, exceed $200,000 a quarter, which is substantial for considering I've only put about $100,000 and some thousand in, and then I've, used margin and different ways to borrow money to keep doing this. But again, it's something that everybody could do. It's like exercise, but you have to go and you have to have somebody to help you. And even if you don't want me to help you, get an index fund with like a Vanguard and just start putting your money in that,
Now, the one thing that you like to talk about, and I remember, in reading from Warren Buffett's biography was this, is that a lot of times how you talk about investing, and he did, is they typically, first of all, they invest in companies. They don't try to get out there and buy low and sell high. Not that there's anything wrong with that, but the whole idea, as you said, is investing in ways that actually
if you know how to do it, it'd be great.
Yeah,
but,
right.
What you
and
think
there are
is
some people that actually have the
and
talent.
Then doing high.
Yeah.
I mean, I do, I followed a lot of Buffett's promises. What's happened to him, and, I've said this in letters to him personally, is that he excelled at a time. It's like playing hide and seek with a group of blind people. You can win a lot easier. Once the internet came out, and once you become too rich, you start thinking, like Buffett made a great investment in Apple, which I did too, but last year he had a chance to buy more Apple. Now he bought it at $200, and he had a chance to buy it at $150. Me and my readers took it, but he didn't take it, and I was like, geez, this guy's kind of slipped, But, I mean, to be fair, he still does what he does. And you have to be in this game. It's like being a karate expert. If you don't practice karate and you're not in the middle of the arena, you're not going to be competitive. And, but he understands the premise of investing. He knows what to do. See, we buy companies. I don't buy a stock because it's going to go up. I buy a stock because it's going to pay me a dividend, and I'm going to get a good return on it. If I'm right about the company growing, like your net worth, for instance, let's say you were a stock. 10 years ago, you are probably worth more now than you were 10 years ago because you have saved your money and invested your money, okay? Most people become wealthier as they age because of that reason. It's the same thing with companies. You just have to know what you're doing. If you don't know what you're doing, it's like trying to drive and not know that red means stop and green means go. And there's a lot of trial and error along with it.
So to premise your book, then, you talk about being a value investor. So let's talk about what that is, because I also have the same approach when it comes to when I go out and make purchases, whether it's furniture, clothing, things like that, is too many people chase price. Well, that's fine. If you want a good couch or you want a couch, you go to IKEA and you can get about 3 couches for less than $1,000. 4 years later, you're probably going to be buying new couches. But I like to find something that has quality, and then I try to find the best price that I can get for it. And it seems that what I was reading in your book is that's the same approach you use as far as this goes.
Yes, he's a pure value investing. A lot of people, Buffett's mentor was Ben Graham, and they bought a lot of they bought companies that were really cheap. And you can't do that today because of the Internet. Too many people know information, okay? And what I'm learning is I'm not really a pure value investor. I've evolved the way Buffett did with Charlie Munger and Phil Fisher. I've evolved. I try to buy a Mercedes-Benz at a Camry price, okay? That's my big holdings are all, 10, 20, 50, $100 billion companies. Some of them are $1 trillion companies now. But I'm looking at the right price. When I first bought Apple 6 years ago, I bought Apple when you backed out the cash. I was buying Apple at 6 and 7 times earnings. And I thought, well, geez, in the real world, nobody would sell their business for that price. And I kept saying to people, they put up record earnings of all time, and people say, well, it's like breaking the 100-yard dash record, and then someone saying you can't do it again. You don't really have to do it again. But and then they had all this cash on the balance sheet. As an accountant, I knew how to read it, and these people were like saying cash was a disadvantage, and I'm thinking, well, and this is where being an entrepreneur came in. I'm thinking, in what business does cash a disadvantage? Okay, I've never found cash to be a disadvantage. I've been poor and I've been rich, and I can say to you I like being rich much more. But I buy companies. I don't care what the public thinks about. Like I listen to people that do technical analysis, and that's great, and I try to buy my stocks. Like I'm watching a few stocks as we speak, and, if they get to the price I want, I mean, I'll tell you Facebook is one of them, but it's at 202. I'm not looking at it at 202. When will I buy it? When I feel it's done dropping, I may put some money in. But I've got to get stuff at the right price. I will never buy something at its 52-week high. That's the way to lose money, okay? The buy high, sell higher sounds good, but I have not ever met anybody and I know all the great investors in the world, I've never seen anybody that's their method of doing it. I sat with Jim Rogers one night, and we talked. He's a legendary investor, and we talked about that. And he told me, he said, son, you have what it takes to be a billionaire. He said, just stay on the course. And, that was a great honor for me.
Well, and that's the big thing, is that you don't follow what other people say, is that you build an instinct for yourself knowing what the right thing is. And a lot of times it's not an easy thing to do. And I know that you were sharing stories in your book that some of the best lessons that you felt that you learned when it came to investing were from watching the movies, for instance, Rocky, as well as gambling. Tell us about that.
Yeah, well, and it's great that you're asking these questions. Most people that interview me about the book have never read it, and it's unfortunate, or they try to pretend they have. I can tell by talking to you that you're a value investor.
Well, if somebody's going to take the time to be on the show, do the research.
They're lucky to hear this. And see, what's very important is you make your money on the buy. If you buy something right, okay, you will sell something right. I negotiate. I'm great at buying sports memorabilia, gambling. See, in gambling's the ultimate in reality, okay? When you put your money up, if you're betting on the Super Bowl this weekend, which I'm doing legally with betting with the San Francisco 49ers plus 1.5 points, I'm betting a very small amount of money, like $50. But you're doing it. It's reality. After the game's over, you know whether you won or you lost. Okay, and you have your reasons why you do things, and it's trial and error. The same way it is when I bought sports memorabilia. I used to tell my dad this stuff is. I remember for my 12th birthday, I got a check signed by Ty Cobb. It was worth $15,
wow.
And I got an autograph signed by Jackie Robinson for $10. These autographs today are both worth over $1,000. Okay, and I saw value. Okay, and that's something. But I negotiated my price. The guy wanted $25 for the check, and I said $15 or nothing. Okay, and I mean, if I would have bought it at $25, I still would have made money. But the premise is you have to be looking. You have to be willing to do what other people are not willing to do. Because see, investing is counterintuitive. Like if you play chess and you're a grandmaster and you're playing someone, the best person will win. In investing, a kid can say, my daughter, the best stock over the last decade that just went was Ulta Beauty. Okay. My daughter Stephanie, if I would have been listening to her then, she didn't start going there until about halfway through. But she told me, she said, Dad, this is what the kids like. Okay. And see, you listen to people. She did help me with Apple and Snapchat. Okay. When she'll tell me, she'll see somebody on TV. She said, Dad, why are the people talking? I said, well, because they went to Yale and they have degrees. She goes, Dad, they're talking about things that kids know and don't know. And see, that's where you get your edge, is that you have to understand something that the general public doesn't understand. That's it's not as easy as it sounds, but it happens.
It's kind of like the philosophy of this, when you're in a town and you wonder, well, where's the best place to get Chinese food? Well, find the place you see the most Chinese people eating.
Correct. Well, absolutely. But in investing, there's a lot of people who just follow the crowd. And the analysts on Wall Street, I call them the analysts, they don't really understand. There's a group of people, I call them academia nuts. And they have high degrees. They went to the best colleges. And unfortunately, investing is counterintuitive. And if you've never gambled and you've never, some people are afraid. I went into business with a guy one time, and I was ready to get to do a lot of properties and stuff with him. And I stopped because he said, I'd rather make $40,000. I'd rather make 40 and look like I make 80 than look like I make 80 and really make 40. And I said, really? You'd rather look like you're making more money than you're actually making? And I realized that he was not a value person like I am. And that's how I run that's what I do for my investors. I explain to them, you can't read my book and learn how to invest. The same way I couldn't read a book that you'd write about interviewing people and just say, oh, okay, I can do it right now. First of all, I wouldn't teach everybody what I knew. And second of all, I couldn't. It takes, 40, 50 years of investing and gambling and doing everything. And that's what you should be asking your financial advisor is how much money have you made with your dividends? What are you doing? Most financial advisors, I laugh at them when I talk to them.
My wife and I were just talking about that today, and for instance, she was saying that, for instance, a company like Tesla seems to be going, through the roof, that, all the kids are just running after, and they're buying this thing, and the stock was this, and now it's up to this. But then she looked it up, and, let's kind of premise this with what you write about, especially value investing. She says, but now Tesla has $10 billion in debt. And you got to think to yourself, because as you were writing in the book, one of the things you like to look at is the earnings to debt ratio to see, first of all, is there value in investing in a company because are they making money, obviously. You want to invest in a company, as you say, better to invest in a company that pays dividends, that's been doing it over a long period of time, at least 10 or more years consistently. Things like that. And I thought, well, $10 billion they have in debt. Well, I asked her immediately, according to what you were saying, well, I wonder what their earnings are. Are they able to pay these debts? What's that ratio for what they earn to what they actually pay out?
They haven't even made money yet.
Yeah, exactly.
See, the problem is and this is what you're talking about with how you evolve. Tesla was a great investment for somebody who had the money. Okay, like if you have the money to lose, it's like going to Vegas. You go there with $500. If you lose it, it's like going anywhere else on vacation. I used to tell a friend of mine's wife when we'd go to the track, so you guys are going to the track? I said, yeah, and you're going shopping with $75, and you're not going to come home with anything except a bunch of stuff, not the money. We have a chance to come home with 1,000, 100, whatever we come home with. But you're certainly not going to come home. If you're going to a concert, you're not going to come home with the money that you spent, okay? You can't do it. And it's the same thing with buying Tesla. Like for me, a famous value investor named Ron Barron, he's been on Tesla for, since it was $100. And I listened to him talk, but in the end, I couldn't pull the trigger. I probably should have thrown a little bit in just because I liked Elon Musk. I like him as a, thing, but, that's not how I make money. You know what I'm trying to say? People make money selling horse manure all around the country. It's just not how I want to make my money. If you bought Tesla, great, but that's not my style of investing.
You also give another example of Amazon,
Yeah,
and I thought that was
another
really
one
neat.
where I thought the owner was, and I was wrong again about that. Some stocks, like they just raise their earnings. I don't think Amazon, they make their money on the AWS part. Okay, to me, 80 times earnings it didn't make sense to me. Okay, I have evolved, but I still won't. I can see a stock like Amazon, but I just choose to not That's not a no-brainer to me, okay? I see no-brainers as when I see a company with a low PE and I think it's going to run, okay, over time, and it's out of favor for a reason or whatever, and that's when I look for, okay? So, it's like a stock like Facebook. It earns money, but, they're going forward, they're not going to earn what they used to earn. But at some point, the fear of selling is going to be, like right now, it's basically just giving up what it made earlier in the year. But at some point, it becomes a buy, and that's when you have to strike.
Exactly. Now, and taking a look at this, what do you think as far as, like, for instance, one of the companies that you like to talk about is Altria, and it became your best stock to this day. What are some of the other things that you can describe for our listeners that would let them kind of get a feel for, how is it? You do a lot of homework. You say that you spend anywhere from 50 to 100 hours.
Minimum.
I
mean, I've done that already. Like, I don't have to sit and read about, I've owned Altria for a bunch of times. What you have to understand is when you're first starting, you should understand what you're doing and what you want. The mistake I made the first two times is I trusted somebody that I shouldn't have. See, if you go to a gym and you want to work out, you could see somebody who can bench press 400 pounds or in great shape. With investing, it's the biggest group of fraudulent people that can't make squat, okay? And they're all big talkers, and they tell you this and they tell you that. Someone says, you're a talker, and I said, yeah, but I'm a doer and a talker, okay? There's a big difference. And my record speaks for itself. Most people, their record is lousy, okay? They don't understand how to do this. I mean, I have friends of mine, they read my book, and they're like, oh, this is a good idea. And then they don't subscribe to my, which is the newsletter, that publisher of my book, the newsletter, was less than 60 cents a day. And I'm thinking, geez, if you hired somebody to come at your house, if someone knocked on your door and wanted to work for 60 cents a day, you'd give them you'd probably give them 75 cents and say, get at it, people. Well, that's what I'm doing for people, and I'm doing something important, not something that's menial. But, you have to be able to, this isn't for everybody, but you have to put your money aside. See, we all have to learn how to allocate capital. Our ancestors, my grandparents, they put their money in CDs, and in the 80s, you got 10, 15% on your money. You could retire. Let's say you retired with $500,000 and you got 8 or 10% interest. You were getting $40,000, $50,000 a year. You could live on that along with your Social Security. It doesn't work like that today, and you have to learn. Every person needs to learn how to allocate their capital, and that's, I teach people how to do that, okay? Not just with their stocks, but with if you read the one chapter in the book, if after you read that chapter, if you don't know what you're doing, a lot of people, shopping your car insurance is one of, you can go to Gabby.com. There's all different groups that do it now, or Zebra.com. You could save, just compare your car insurance you have now dollar for dollar to something else. You'll save yourself money, and it's something you need to do. It's every dollar you save is, all these people try to get rich, and they go to these gurus or they go on social media and they start saying all this enthusiastic stuff. Folks, the first rule of getting rich is to pay yourself first. Take whatever money that you get. If someone gives you $100, you take $10 and you put it aside, and you never spend it the rest of your life. If you do that, you'll be rich, and if you don't do it, maybe you'll be rich, but you won't be as rich as you should be.
Now, in talking about dividends paying stocks, let's go ahead and share with the listeners, what is a dividend? How does it come about when a company pays this out?
Good question. Let's just say, for the sake of argument, you buy a company and they return $1. Let's say they make $3 a year, and they want to return $1 to their investors. Okay, that's what they pay every year. So they're going to send you 25 cents per share every quarter. So now, if that stock is $50, you'll be putting up 50 to get 1 every year. That's a 2% annual return. If you buy the stock for $25, you're getting a 4% return. Okay. Now, someone said to me, well, Bill, the dividend I'm getting is 8%. That's good, isn't it? It depends on the company. Usually when you're getting 8%, the companies, there's something wrong with the company, generally speaking. Someone said, well, how do you know if there's something wrong or if there's not? Well, that's why, in football, the guys get paid a lot of money because they know when to throw the ball and when not to throw it, okay? And that's how you have a certain skill set. My job is I spot there's real fear and there's imaginary fear. I'll give you a brief synopsis of it. This virus that's going on, okay, it's real in China. If you're Starbucks or you're McDonald's, your sales will be affected. Now, the question is, how much will it be affected? Your stocks are down, but how much are they down? Or whereas a stock like Altria or a stock like, that has no exposure to China, like, I'm trying to think of a stock off the top of my head that would do it. But like stocks that just have like a restaurant chain that has stocks, has the restaurants just in America. They're not going to be influenced by it. Okay, that virus is not. Everyone's talking about, Billy, this could spread through the whole country. Folks, do you know how many people die of the flu every year in this country?
More than you can imagine.
No, between about 14 and 50,000. Okay,
mm-hmm.
So what's going on here is really this virus is not. It's important in China, but I personally think it's an overreaction, and in a month from now we won't be talking about it.
Well, let's go back a good few years when they were having the Olympics in Brazil and the Zika virus. I mean, you don't even hear about that damn thing anymore.
And I made a bunch of money in that because I bought Delta at the time, and it's in one of my. If you look at my old newsletters, what's beautiful is you see that. And I bought Delta at the time because I knew that this was This was an overreaction.
See,
people were getting scared.
Let me bring this up now. See, this is what I like about what you're saying here, because it's the same way I feel that I look at things. Okay, so they got the Zika virus. You could just imagine now. Okay, this is during the time of the Olympics. So what businesses might be affected that sell or trade? In such a way that this fear would actually drive the price down. Well, one of them would be airlines, right? And that's what you did.
Well, I thought it would be overdone. See, sometimes, being able to distinguish between real fear and imaginary fear is the difference. Like, I bought a stock called J.P. Morgan, which I don't own banks anymore. But at the time, I bought this thing because they had a trader that lost, this big whale lost like $5 million in a trade. Or $5 billion in a trade. Okay, well, and everybody got so panicked about it. But see, they didn't talk about how many times he's made money on trades. Okay, that's just, it got, that figure got really high, and everybody's like, geez, this guy lost $5 billion. Well, he didn't do it all the time. You got to count. It's like when people go on to Las Vegas and they say, oh, I won this much. It's like, okay, what did you lose? There's two parts of the equation, and see, for me, when I hear bad news, right away I'm trying to see, is this real bad news or is this fake bad news? And that's my job, is to try to distinguish that.
Right. Now, I know that we didn't really touch on this, but I know that we talked about gambling earlier, and I couldn't help because one particular thing kept stirring in my mind to bring up about people who go to Vegas and who actually play, and then there's the people who actually play certain games professionally. So, for instance, there's poker, and there's one real fascinating story, and I actually seen a documentary on this several months ago, and it was the documentary was called Kid Poker, and it was about a young man out of Canada who got really good in his neighborhood. So he thought, well, I'll go ahead and roll up the stakes and I'll go to Vegas. So he took down, I think it was something like $3,000 of winnings, and he went down to Vegas. Found himself broke, went back to Canada, got $3,000 more, started playing a little bit more, went back down to Vegas, went broke again. So this guy went to Vegas 3 times before he started winning. Now, what's really fascinating about that is This guy went on to become 5-time world poker champion.
Daniel Negreanu?
Yep, Daniel Negreanu. You know exactly what I'm talking about.
And I used to play poker.
Yeah. But the thing is, that's exactly what he did, is he played, you know.
Well,
and
you can't win the game. You're Thomas Edison, which I'm looking at my autographed picture of him that I bought with some of my winnings. You don't. He didn't invent the light bulb the first time. It took him 10,000 times to go through and do it, okay? What's nice about modeling here is you're not going to have to start the way I did. There's, books that explain. I mean, like I said, if you don't want to subscribe to me, and I think you're foolish, but if you don't, you can start on an index fund. And, but you're not going to be able to do something. You could get lucky doing this, but I have a saying, when people with experience meet people with money, the people with the money get the experience, and the people with the experience get the money.
Exactly. I like the other one, too, that Rich Dad, Poor Dad Robert Kiyosaki said. He says, there's a reason they're called brokers, because they're usually broker than you are.
Yeah, well, and that's how they try to do things. And, like Kiyosaki, he says things, but then you find out that he wasn't, like, when you Google it, you find out that he kind of made up a lot of the story, which it's like a fable. I don't believe people's. To me, the basics are still save your money, buy things right, and then find out how to compound your money at a great ratio. Okay, if you do those three things, you'll be all right. And if you don't do those things, you're going to have a problem. Okay, it's just that's the way it is.
Yeah, you suggest at least for people to come up with, if they can, $2,000 is a good minimum to start investing.
Well, I will tell you, that was 5 years ago. Now with Robinhood, you can start with $100. And I think that every child in high school should start with $100, okay? And if you buy the top 100 stocks, there's no way they're going to go to zero. It can't happen statistically. So after a year, you can trade in and out of those stocks. Your account may drop, but it won't go. You won't lose all your money. And guess what you'll learn in $100 time?
Quite a bit.
The education you'll get. My daughter's boyfriend has been doing it. Hello, Michael, if you're listening. And he started investing with $100, and now he's going to be approaching $1,000. Okay, he's been adding parts of his paycheck, and he's a college kid, but he's been investing. The other day, he's telling me about AMD, and he rocked it, okay? And he likes Tesla. Now, we didn't buy Tesla, and I showed him. I mean, he didn't have enough money to buy the shares himself. But you're learning, and see, what he was explaining to me about Tesla makes sense. I should have probably put some money in because, kids see things that regular people don't see. Okay, they see where the trends are going. And if you listen to them, when I first bought my Apple stock, my daughter, our cat died, and she said, Dad, this is the worst day ever. And I said, well, it's not going to be the worst, but it's going to be one of them. But we took her to go get an iPod. She went in there, and we got her the iPod, and she showed me that. I said to her, and she said the magic words. I said, Steph, you already have a case. She said, Dad, everyone knows that you need a different case to match your outfit. Well, a 10-year-old that goes to school knows that, okay, or 9-year-old. But I didn't know. Well, then I realized that Apple was not just a technology company. It was a fashion thing for these kids. Okay, they were going to buy the cases. They're not just going to buy one case. They're going to buy 6. When I was a kid, you got one case and you liked it, okay? It's not like that today, okay? And I learned that and then I would explain to her, and she explained things to me. When I'd ask her questions, she understood why kids wanted iPhones and not Samsung or not LG, okay? She explained it to me. And see, with kids, again, you all want to get good ideas. When I was a kid when I was a substitute teacher, I used to collect baseball cards, and one of the kids told me, he said, "Sir, I want to teach you something about this." And I was thinking, okay, what's this guy going to teach me? I've been collecting since I was 5. This kid's about 8. He said, "Sir," he said, "batters sell for more than pitchers. And if the player was in New York, they'll sell for more than somebody in a regular town." I was like, whoa, he's right about this. And see, you're learning things from people who are in the trenches like we talked about before.
Well, and the key thing, too, is to get started. If you're saving money, you put that $10, then you get in the habit, you do it again, and you watch it grow. That becomes the magic. It's much like probably, I want to say 14, 15 years ago, I decided to go ahead and get on to Google AdSense.
Sure.
Just go ahead and do it, okay? And so, I remember the first 8, 9 months, you were lucky if you were getting 3 or 4 cents. Okay, so what? I didn't care. It was free to sign up to do that. If you have a website, why not do it? As well as YouTube. And so the next thing you know, following year, you're starting to see, ooh, this is now 25, 50, 75 cents a month. Okay, that doesn't sound like a whole lot. But then by the end of that second year, it started getting to where it was $1 and $2 and $3, and you're like, oh, And the beauty of it is, it wasn't so much that it was beginning to grow to snowball, but the beauty is that you've seen that passive income was possible. And pretty soon you begin to see things differently, like, now how do I find ways to take my money to maximize what I would like to call passive income? And I have a lot of people that are adults that don't even know what that is yet.
Well,
and I'm thinking, if you don't know what passive income is,
to their kids, and it's not too late for people. Colonel Sanders didn't start doing stuff till he was in his 60s, and he ended up becoming a millionaire. Okay, back in the time when being a millionaire was, a lot different.
It was big.
When you can buy a home in California for $40,000, not $4 million. Okay. And it's important, like what you just said. I have a YouTube channel, Bill's Petrino Truth Machine. Go on YouTube and you watch, listen to the videos, and I still get paid. I tell everybody, watch the ads. And someone will say, "You'll do this and make ad money?" I just calculated, I'm making like $20 a month now. But see, to me, I'm doing this anyhow. It's like someone paying you to hug your wife or to kiss your kid. You're doing it anyhow. You have to understand multiple sources of income, and you have to have great vision. I may be buying a company that markets great products, and someone said to me, "You're still going to do stuff like this?" Yes, because that's what I learned. If you service the people, the money will end up coming behind you. Okay. See, investing to me, it's still a challenge, but I don't have to spend all day. I've done all the heavy lifting. If you show me a stock, I've probably been reading about it for a long time. So it's all cumulative,
Now, what are your thoughts about investing in what are called exchange-traded funds?
Yeah, my advice is, if you're not going to listen to a person like me, and you're just going to do this and you just want to do it willy-nilly, if you bought an index fund, like there's a guy named Jack Bogle who brought these low-cost ETFs out there, and you can just have the S&P 500. You buy an index fund, you'll get what the market does. Okay, I can beat the market by 8 to 12 points a year, and that's substantial over the, doubling your money. I can double my money much faster than other people can, still using the same amount of safety. Okay, and I don't have a problem with funds. In fact, I think that most people belong in them if they don't want to do their own homework or hire, just go and get educated with, my billspetrino.com, website, or the other websites that I'm involved in. If you don't, I just feel that investing is something that you have to learn how to do going forward for no other reason but to keep your money working for you.
So I have to ask, since it was brought up earlier, and I'm not saying that you are, but what would make you different from most of the gurus touting their wares out there?
Well, I'm different for 4 or 5 reasons. And the book, a lot of people tried to criticize me after the book. I mean, the people that hated me anyhow. They didn't like the fact that I didn't tell them how to do it, okay? The book's a proof element. what I'm trying to explain is that I started gambling at 5 years old, and so I tell the story about selling baseball cards in the book when I was 6, and I tell it in my speech. If you go to Bill Spatrino, and I am a shameless self-promoter, Truth Machine on YouTube, you'll hear the whole story. I don't want to waste the time now, but I explain to people I've been doing this for a long time. It's funny because in the speech I told my people, I said 40 years ago I was wearing a concert shirt, an ELO shirt, singing Last Train to London, and and the other day when I was writing my speech, I was wearing the same ELO shirt from a different concert that I went to.
Great album, by the way.
Yeah, great album. Singing Last Train to London. And see, it didn't really change. This has just been, I'm like this Huck Finn type character that has been like going, I'm like what Buffett pretends he is. You know, when you fly in a private jet, you're not a regular person. Okay? My neighbors have no idea that the person sitting by them is worth over $30 million. They don't know. Okay? They would think, someone went to his Petrino fair. I do these things for my investors, like how Buffett does his thing. And we were in Las Vegas, and the person, you know, they introduced their kid was there, and they go, "That's the guy? That guy?" Like, and that guy's worth $12 million, which now that guy's worth $30 million. But they didn't know, and it's something that when you either get a good feeling about somebody or you don't. Some people are taken back by me. They don't. You know, the same way they don't like how the president maybe acts a certain way. You judge people based on their performance. If you want somebody who's going to be Mr. Nicey Nice, that's going to tell you and pump sunshine up your butt, then don't hire me, because I'm not going to do that. But I'm going to tell you what I think, and the proof is, you know, I have, you know, over 100,000 people that follow me, so clearly I'm doing something right. I want to say hello to Dave and his wife in Louisiana who are listening to me as well.
Very good. You know, I know you give a great example, too, of what you were just talking about production. You gave an example of two different baseball players. You know, one was being paid $16 million or something like that. The other was being paid basically, it seemed like, the league minimum. But the one who was being paid at the low amount was actually getting on base more often than the other guy. So obviously the other guy is priced. And one thing I wanted to point out, too, is, you know, when you talk about these gurus that are out there, the one thing that I began to notice some years ago, my biggest question started surfacing was, how much of all this wealth they're claiming they're going to help you make did they make from the products that they're selling to you to promise that you're going to make all this? You know, I can't help but think of Susie Orman, you know, on OPB, you know, promoting all this basic information that everybody should know by the time they're out of high school, but yet she's making all of her money selling her, you know, products and so forth.
She's a big phony, okay?
Yeah.
She told people to go and get out of stocks, you know, in 2009. She put people into that she was pushing before the markets crashed, and then afterwards, well, you put your money in you know, venture bond, you know, like in 10-year treasuries. Well, that's good when you have $150 million. But see, again, I called her a token woman, and people, the feminists, went out and got after me. So, oh, you don't like feminists? No, I know. I like the CEO of Pepsi's a woman, and she's doing great. I don't like phonies. I don't like people who are no good at what they do. Okay, they're selling something that's baloney. After the first book, it's fine. It's like Rich Dad, Poor Dad. The first book was fine. The next 6 were just money grabs. I mean, that happens in my company. They want to do all this stuff. Well, we want to do a service for $15,000. Look, the same thing I'm selling for $400 is the same, is fine. You're not, quit doing money grabs. If I wanted to do a money grab, I'd do it myself. Okay? I don't need you to do it. Okay? And it's just, there's so many phonies out there and people who are undesirables. I don't ask people for, like I said in my book, I make money with people. I live in the same neighborhood. When someone asks you to hold the money or asks you for a large sum of money, it's a scam. 9 times out of 10, it's a scam. Okay, I don't ask anybody for money. You want to join my BillsPetrino.com? You know, it's an investing school. if you're, my normal price is $600 a year. Now, if you are listening to this and you want to get involved and email me at ticketbill@aol.com, you'll get it for less than $1 a day. If you want to hire somebody for less than $1 a day, then take a shot at it. But
I know one of the things, too, that she kept touting a lot about, and I always have concern, and I've never invested in one, is you think of things such as IRAs and 401ks. And the reason I kind of, some, people who are consistent investors say, I'll put some of my money in it, but you look at the control, you lack a lot of control in those things. The government tells you when and where you can take it out, how much. The corporations that you put that money into, they decide where the money's invested. Of course, they're going to invest the money in a way that they make the most money and maybe, kind of give you a minimum there. And, you kind of wonder, are these such good things to invest in? I mean, a lot of people say, well, why wouldn't you invest in something where the company matches you? Okay, I guess.
If they're going to match. See, I always agree with something that if they're matching and it's like an index fund or something, I'm in. Okay, I would tell the people, invest to the match. But if they're not matching, it depends if you can have control. If you can't have control, I mean, if I was at a job and my boss told me, like, if you can buy discounted stock, like one of my clients worked for Google, and I told him, I said, buy all the discounted stock you can. Do you like Google stock? It doesn't matter. You're getting it at 20% off. I'll buy Google all day, 20% off. Okay, or I think that's what he was getting. Okay, he was capped out of it. Okay, you can only do so much. But each opportunity, I don't like to speak in general terms, even though I call most people. When I say that, I say most. And statistically, I mean, I have numbers to back the things I say. Okay, I don't just start saying things, and it doesn't, you have to understand things. I was the first major media person to predict Donald Trump would be the president. If you Google Bill Petrino, Donald Trump, you see I did it in 2010, not because I don't like the Republicans or the Democrats. I want people to understand I know a lot of politicians, but that I thought a businessman, the way our founding fathers thought about this is that we would have a businessman doing things. And if you've been successful in New York real estate, and I'll make the disclosure, I read the book, The Art of the Deal, and that's how I learned how to negotiate and do things. But that's what you want. If you're dealing with other countries that are cheating you, you want a tiger in there fighting for you. Okay?
No
and whether you
that.
like, someone said to me, Billy, I don't like this guy. It doesn't matter. When you go to your doctor, you don't ask him, hey, are you pro-abortion or whatever? You want to go to the best doctor that's going to take care of you. Okay? And they might not have the best bedside manner. Who cares?
Well, it's kind of like
Gordon. Guy myself.
Yeah, it's like Gordon Gekko in the movie Wall Street is not always the most popular guy that gets the job done.
Well, and that's just, when you're investing, you don't ask your landscaper, hey, are you pro-life? So why are you asking your politicians that? Do you know what I'm saying? You want to find somebody who you think is competent. And because if you don't, you're going to be speaking Chinese or speaking North Korean or another country. And you don't want that, okay? And that's why I try to explain to people that the founding fathers, the president of the United States, they picked the president to be 35 when the average age was 47. Okay, they did not want a 35-year-old person now. They don't want a lifetime politician. Okay, in both parties, these people, all they want to do, I ask them, what have you done? Oh, I've been in politics all my life. That's like it's like being a person who gets paid to start fights. Okay, like I want somebody who's actually done something, and I want them to represent me. Mm-hmm. Okay.
Now, I got a question. Since I was bringing up the idea of the 401k and the IRA. What about Roth IRAs?
People ask me. I think Roths are fine. I will not convert my taxable to a Roth because they make you pay the tax. I believe one day, and this comes from my tax history, I don't believe strongly. I believe they're going to eventually start taxing the Roths. They say they're not, like when you take it out, but I think they're not going to tax what you put in. I think they're going to tax your gains. That's my idea. I get these ideas. Like 20 years ago, I told people that I thought that prostitution, gambling, and marijuana would be legal in my lifetime, and you're starting to see the gambling and the marijuana thing starting to happen. So, and it's because of the tax dollars. They just invariably, we're running $1 trillion deficit because of Social Security. It's not because of the president. The Congress keeps spending money on the military, which is kind of what they need to do. But the truth is 2/3 of our budget goes to Medicare and Social Security, and we need to reform those programs. But if you do that as a president, I can tell you that this president will reform them in his second term if he's reelected. But he's not going to say that. Okay, you can't say it. Political suicide. Okay, but that's why it's very hard to be politically correct and get your work done too. Okay, and that's why half the people that are listening probably say, "Oh, this guy's for Trump." It's not. I pick a person based on their performance. If Trump was raising taxes, not cutting them, and not helping the working person, I would be against him. Okay, it's not personal, like they say in the movie The Godfather. It's not personal. It's business.
Now, what are your thoughts about people who are into midlife and older? Do you consider that maybe as they invest money that they should increase bonds over stock shares in their portfolios?
No, that's the biggest fallacy. That's another thing that I was just in a meeting with a couple guys yesterday, and they're great financial advisors. They're listening, Pete and Brian. This is my feelings. When interest rates are low, you shouldn't be in bonds. If interest rates were 10%, I'd be in them, but they're not. And we're never going to have interest rates. This is, again, another one of my predictions. I just don't believe interest rates will ever be high again because the country owes $23 trillion. They can't have high interest rates. Trump keeps telling the Fed guy, you got to lower rates, man. We got to get our debt down. Okay, we owe money. That's every dollar we pay in debt. Guess what you can't do with that money? You can't invest it in roads and anything. Okay, it goes to someone else. So, I'm a big believer that if you own stocks, what I like about stocks are when you put your money in, you don't get billed. If you buy real estate, and you're never getting a bargain on real estate, you can get a stock that's 15% off because somebody's afraid of a flu or some kind of baloney. You can't buy a house for $200,000 and then someone says, "Oh, there's something going on in China. I want a 15% discount." They'll look at you like you're a moron. Okay. Mm-hmm. And when you're doing property, you have to pay taxes. You have renters that destroy your place, and you have to do upkeep. When you buy a stock, it's in. Your money's in. Now, if you're a nervous Nelly and you're jumping in and out all the time, now you're a gambler. Some people don't have the temperament for this. Okay. They don't have we'll call it, balls, and they have to do that. I tell people the most important thing to be an investor is you need brass balls, not crystal balls. You don't need to, and that's clean that I just said. You don't need somebody who can predict the future. What good is predicting it if you get too nervous and you sell out? You got to sit tight. Okay, you got to just. Nothing changed today. My portfolio is showing a 7-figure loss right now, more than that. But that's all relative, and it's part of what happens. I've been on a run for the last 17 weeks that has been amazing. So you can't. It's like being a football player and saying, "Well, I don't want to be tackled." You're going to be tackled. How do you react after that happens? Do you quit the game? No, you get up, give the ball back to the referee, and get back in the huddle and go again. And that's all. I've been constantly involving. When I wrote the book 5 years ago and how I invest now, it's the same philosophy, but I had filters. There's some filters I've added, some filters I've subtracted. It's constantly changing today. 75% of all volume are algorithms. Okay, they're computer programs. They hear the news and they start trading. That's all that went down today. That's why we're down. There's no real reason for the stock market to be down.
So then I have to ask you, because you hear this a lot from people who are either investors or they claim to be investing experts. The day of the buy and hold is gone. You shouldn't be doing that.
Dumbest thing I've ever heard. Maybe the dumbest thing.
I think so too, especially if you got
Johnson
Johnson
and Johnson.
Don't
say that. I mean,
yeah.
I will. Jim Cramer's not my favorite person. Okay, he said that Apple, he tries to say he loves Apple, but yet you go on Google and you see that he called it the J.C. Penney of tech. Or he said he loves Snapchat, but at $6 he told you not to buy it. So he forgets that there's things called Google. But the one thing he says that I listen to is buy and homework. I buy a stock, I hold it. There's a stock called Qualcomm. They do chips and whatever. Their CEO, I used to call him Stupid Steve. All my subscribers are listening, are laughing because I call him Stupid Steve. And the stock got up into the 80s this year. I told everyone to sell it when it got to 88. People are going, Billy, what about 5G? Dude, 5G's been around a long time. This guy is a moron. The CEO, if you're listening, Stupid Steve, you're stupid. Okay, you shouldn't be the CEO. And then he gives himself a bonus, okay, after he makes this deal with Apple. But the long and the short of it is, I told people to sell that stock, and it's right where it's lower than it was the day I told everyone to sell it. And it's because, and 5G's still around. You see, the worst thing is you have Bill O'Reilly, and you have all these people out there trying to sell Judge Jeanine, and if I see Matt McCall's picture or Paul Mampilli and all these people that are trying, look, I know all these shoysters. They'll say this guy's Wall Street legend, and then you put him in Google and you don't even see his name. Put my name in Google, you'll see a whole bunch of articles about me, okay? And I've lived in the same town. It's not like I have to transfer towns and change. These people get these gurus. Like this one guy, I'm not going to name him, but he changed himself to, Master Somebody, okay? And I'm just sitting here thinking to myself, Jesus, this guy's a phony, okay? Why is he changing his name? I ain't changing my name. I go to the same neighborhood and same place that I used to go 50 years ago. I walk around the town, and everybody's happy to see me because I've made a lot of them a lot of money.
So I guess one of the final questions, we had talked about Warren Buffett earlier. You take a look at his Berkshire Hathaway stock, which is up there, approaching $400,000, and they don't offer dividends. Why would that happen?
Well, Buffett feels that he has a better place to put the money, and you're really, from a tax point of view, it's better. For many years, he was smarter to keep the money and compound it, okay, over a long period of time. Like I said, Warren Buffett today, he's underperformed the S&P, okay? I'm not saying he's not a smart guy. I'd love to sit and pick his brain about things, but he is not a great investor anymore because, and I have this argument, when you are flying in private jets, you're not sitting with real people. When I go on a plane, and it's another thing, I flew on a plane 5 or 6 years ago, and I saw a lady and her husband, they were in their 70s, using an iPad. And when then they told me their mother, who is 91 years old, is using an iPad, and she goes to the Apple store by their house and takes classes, that's when I knew that the iPad was much more popular than people thought. Okay, and it just reinforced what I've already thought, okay? But you're seeing things. I'm constantly questioning. We went into the computer store the other day, me and my daughter's boyfriend, and I'm asking him about AMD, and I'm asking him about different stocks and different things that are being sold in there because I'm trying to get information, okay? The minute you stop learning, Buffett will say, I don't need help or whatever. Dude, everybody needs help. Okay. My best ideas I get from kids and from people that aren't me, but they wake me up to it. The light hits me. And I realize I can do the analysis. I know when to buy them.
Well, Bill, I want to tell you, first of all, it was certainly entertaining and a pleasure to have you on the program today. And I think why people should feel encouraged to pick up The Great American Dividend Machine, your book that we've been talking about, is this. You take a look at how, I guess, reasonable what you present here is when it comes to investing, that people can say, I think I could do this. And it's a stretch to say this, but it's true. Much like going to Vegas, your chances of winning increase when you learn just simply how to play the game.
Well,
then you get in and you play the game.
100%. See the book, and buy the book on Amazon. Get it cheap. Don't get the low price. I keep negotiating. I keep following. You buy the used book, okay? And I explain this to people. The book's a proof element. You're not going to finish the book and be ready to go. What it's going to do is it's going to sell you on who I am, and if I'm your kind of guy. I'm not a lot of people's kind of guys, and
right.
A lot of them are. I'll leave you with a fast thing to end this. There was a kid I graduated with He probably won't listen to this because his ego is too high. But he was like, on Academic Challenge, one of the 3 top richest people. Well, at our 30th reunion, he came up to me 10 years ago, and he said, I heard you're a millionaire. Is that true? I said, I am. He said, how much do you have? I said, I have $1.2 million, blah, 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 and stuff. He said, well, I'm not quite there yet. Well, then he sees me like 4 or 5 years later, and he's like, yeah, Bill Spatrino, how you doing? I said, okay. Right before this book came out, and he said, we're both millionaires together. I got $1.1 million now. I said, Chief, I'm further ahead of you now. I've got $5 million. Okay. See, if this guy would have just listened to me and would have asked me to be subscribed to me, he'd have $2 or $3 million instead of 1. But his ego won't let him do it. So push your ego aside and try to find somebody. If I'm your kind of guy, great. If I'm not, I'm already rich. I don't need to talk to other people. But I like doing it because I didn't have this opportunity. When you and I grew up, we didn't have this opportunity, and I want to make sure that everybody has it. And if it's not for you, for your children and grandchildren.
Well, whatever the case is, you better make the decision so you can use time in your favor and compound interest, as we've also been talking about today, because you don't want to be that guy realizing, boy, I wished I would have done this 10, 15, 20, 30 years ago. Now's the time. Just get started. That's the biggest thing, is get started, just like I did years ago when I started the Google account. Just get it started, especially if it doesn't cost you next to nothing. Just get started. Buying this book may get you started to make that decision, but whatever the case is, do something. You also have a website people can find out more about your work. Why don't you go ahead and give that out for our listeners?
If you email, the best thing to do is email me. BillSpatrino.com is my investing school. It's the best thing to teach your children, grandchildren, and teach yourself. It's interactive. See, most people, they try to read or listen to YouTube videos. It complicates them. They need to actually ask questions. Like I said, my normal tuition is $600. For the people that you're listening to, I'll give you the break. In fact, I said $299. I think I'll give it to you for $249. But you got to email me at ticketbill@AOL.com.
Sounds reasonable to me. Bill, thank you so much for taking the time to be on the program today. I know my wife loves reading your newsletter.
Okay, thank you very much.
You bet. It's been a pleasure.
Okay, bye-bye.
We want to thank you, the listeners out there, for joining us. You can discover more at Beyond50Radio.com. That is the number 50, Beyond50Radio.com. Sign up for our weekly e-newsletter and keep up to date with what's going on in the world of Beyond 50, as well as our upcoming shows. I'm Daniel Davis. Again, thank you for joining us. This is the Beyond 50 Radio program, and remember, live your day past halfway.